on today's show, 3 questions. Number 1, how volatile is elections week? Number 2, are you ready for shipping delays? And number 3, is student loan forgiveness actually going to happen? Welcome to Dennis Money's 2 cents, where we help Dennis navigate all the noise. I'm Matt.
I'm Will.
And I'm Rabih.
Yeah, you are. I always get a little bit self-conscious, we'll say, when I'm on with Will, because he has the best voice of all time. And every time I get self-conscious. Rabih, I don't know how you feel about that, but I really do.
Imposter syndrome. Anytime I'm next
to Will. It truly is. I'm just like, golly, his voice is so sultry and perfect.
Yeah, I'm amazing.
Yeah. All right, let's jump in. Rabih, we just released an episode on elections. So obviously it is election coming up within the next month. So this is a pertinent topic. But you wanted to talk about how volatile is elections week.
Yeah, this is going to be a little bit different. If you're a day trader, you'll love this segment.
I am a day trader, so I'm going to be listening very closely.
Yeah, because we've discussed it. That's true. We've discussed elections and the scope and how it fits an investment philosophy long term. But what about that week? That week when you're more inclined to text your advisor, hey, what's going on? And we're just going to tell you what the data is. And you'll see that the moves up and down are expected and normal.
Are you going to share what the Trump trade is and what the Harris trade is?
Not to that extent. Those are on the paid subscription.
Dang it. Okay. You got to pay for that.
But let us start. I found an article that collects data from like Edward Jones and Bloomberg. So it had a bunch of resources that is good to reference. And it discusses how the S&P 500 moves the day off, the week off, the month, the year of the election, and then discusses how the VIX reacts. Let's refresh everyone's memory. The VIX is the volatility index. It collects information from put options and call options on the S&P 500, and in a sense tries to come up with a metric, an indicator that they threw in that index, and it tells you what the expected volatility, the expected swings up and down in the stock market for the next 30 days are on an annualized term. So
is it fair to say, Rabih, the VIX is people call it the fear index?
100%.
It gives you an idea of how scared people are.
Because people go to the puts and calls to create hedges and create insurance on their portfolios. So when there's demand for insurance, because people are afraid and they're flocking to safety, the VIX index rises. That is in general how it looks like. On average, the VIX is usually around the 18% mark, which means for the next 30 days, the swings are going to be 18% if you annualize them. This is what the market thinks it's going to be. So here's what I have. I have from 100 and I'd say 4 months before elections until elections day, all the way to 4 months after the election. In those 4 months up to a month before the election, the VIX index on average is between 17 and 18. So exactly in line with historical projections. The week, I'd say the 2 weeks before the elections and the 2 weeks after the election, on average, the VIX index, the volatility is going up to around 22%. So we're jumping from 18 to 22. That is a 22% increase as well in volatility. So just because the VIX as an index is a low number, an 18 to a 22 jump is actually significant. It's like there's a quarter of volatility extra than we usually see day to day. This is what the VIX indicates. And then 2 weeks after that, it starts going back down, and actually it averages around 16. So below than what was pre-elections, which means there was a burden on the market, and it got relieved once elections done, and we know that piece of information. So this is what the VIX has been what has done. Just in words, since World War II, volatility has decreased an average of 16% in the month following presidential elections. Most recently, the VIX index declined 36% in the 10 days following 2020 Trump-Biden election. So it's important. And why are we looking at the VIX? Why are we looking at it? And because there is a very strong negative correlation between what volatility does and what the stock market does. Usually when the stock market is going up, volatility is dropping. And when when stock market is going down, volatility is increasing, and that correlation is strong in the 90% of the time. So when we are seeing strong indicators that the VIX goes down after election periods, it gives us a high confidence to assume that the stock market goes up after elections. That is the whole idea. So before I move to stock market data, do you guys have any questions about the VIX?
Yeah, I'm actually sitting here thinking, when we talk about the VIX and you're talking about the mechanisms of how it is actually, how it actually functions, using put and call options. Is it safe to say that the VIX is a fear index of how basically professional money managers feel? Because I'd imagine it doesn't do a great job of indicating how the normal person feels about the market from day to day, because normal people aren't using options. So is that fair to say there's a delineation there?
True. Honestly, if you want to segment the market between professional money managers and retail investors, they play a different game. If you listen to what retail investors, and you go onto Reddit and Wall Street Bets and see what options they trade, they're trading the options that expire the next day, that are more like a lottery ticket. They treat the option market like a casino. Those are noise that do not really affect the stock market, especially when you're looking at the VIX index, which is taking the 30-day expectation. The institutional investors have a longer term horizon, and they are hedging themselves over the next 6 months, and they interact with the options market in a more systematic way, based on rules that govern their portfolio rather than the whim of the moment and what they feel the movement is going to be. So those are different ways to interact with the options market. And for the VIX to actually move, no one person can change the VIX. It requires big hedge funds with billions of money being dumped into certain options to actually move the VIX. So yes, the VIX moved when COVID happened. That was a thing that actually affected institutional investors. The most recent spike in the VIX was when the Japan carry trade unwinded, and back in August 5th, and the VIX jumped to 60% for on August 5th for a couple of hours. No retail investor was playing the Japan carry trade. They don't even have the margin available to do that. So yes, the VIX is actually what Wall Street thinks, and not what a retail investor thinks.
I'm so glad that you went through that, Rabih. That's a really good explanation, and something we highlight all the time. We want to continue to highlight this. I love that you said they're playing a different game. I think look no further than this example. And I think the problem is you're going to see on media headlines and news and everything, they're never going to differentiate that for you, right? Meaning the media headline is going to talk about the VIX and talk about what it means for the market in the next 30 days, the next week, or election week. But I love that you just broke that down in such great detail, so people that can understand, dentists out there listening, 99% of you are not traders, right? Are not out there day trading and shouldn't be. And so I think it's just good to break that down of how that structure works and why the VIX is important to maybe just understand, but also realize the context of it, and that it's not something that you should be paying much attention to when it comes to making changes in your portfolio.
Yeah,
so
100%.
Go ahead.
100%. A dentist should not be worried about this. But once the dentist on November, 8th, 9th, and 10th looks at their stock market portfolio and they see it down, before they reach out to an advisor and they text them, for example, we just want to make sure that the message regarding that, the market knows that this happens. The market has already hedged itself around it. The market is waiting for that volatility, because on average, since World War II, it has been happening. This doesn't mean that this time it's anything different. We are expecting that volatility to show up.
Yeah, you're setting proper expectations, which I love. Yes. Will, what do you have on this, if anything? Any questions or thoughts?
That. I think it's good. I had a client yesterday who we recently changed an allocation to a higher percentage of stock, kind of reach out and was like, well, is this really a smart time to be doing this? We're just a month away from the election. And, it was a reminder to say, well, we know that, the idea is the market's probably going to become volatile during the election. That doesn't mean it affects your portfolio at all. And if anything, we're planning on that. And it's just the bottom's not going to fall out. It's just going to be a short little blip. And when you zoom out far enough, you won't even be able to see it. So
true. It's funny. I had a client call yesterday out of nowhere. They're They're amazing. They're like some of my favorite people. And she's actually the opposite in the sense of she's always looking to hoard some cash on the side.
Yeah.
And she'll call me out of nowhere sometimes and be like, hey, the market's on sale. Should we throw some money in? Like she does that. And I was just talking to her yesterday, kind of the same thing, Will, but on the opposite, where I was like, hey, listen, we can do that for sure. And I'm happy to do that. And I'm happy to take your calls whenever you want to tell me, like, let's throw some money in because the market's down a few percentage points. But I emphasized the same thing that you just said, but again, on the other side of it was like, look, this is not going to move the needle for you, like at all. You're never going to win this game of playing this, whether it's timing on the negative side of selling or waiting to see, or timing it on the good side. Even though it was good behavior, I love her behavior of saying, I want to buy things on sale. It still just doesn't make sense.
Right.
So it's good to understand that on both sides. Rabih, you've got a smile on your face.
Yeah, no, I love that you mentioned the timing of it, because my next data is it's a great segue to that data. So
we must be professional at this or something. I don't know. That was just like, we've been working together for so long. Who knows?
Okay, so here's what I have. Over the past 80 years, in the month leading up to presidential elections, the stock market was positive for that month in only slightly more than half of the years. However, from the election through year end, the market was positive during that period in all but 3 out of the 80 years. This is historical data. We're not really taking a position over here. Now, let's talk about the timing of it. Let's look from the perspective of 1 week later. The stock market dropped an average of 1%, and 60% of all these weeks were down. A month later, the stock market increased by an average of a little bit less than 1%, but the table flips against the 1 week figure. Now it was 60% of these months were positive, rather than 60% of the weeks were negative. And then, unsurprisingly, a year later, when you look at the data, the stock market rose an average of 10%, and the stock was positive 70%. Stock market was positive.
It's just back to normal. It's back to normal.
Exactly the data we use. 10% on average, 70% in a given year that the stock market is up. So it just converged back to the normal, and there was just this noise between the 1 week shooting to the lower side and the 1 month shooting to the upper side, and then averaging out afterwards, which is great data. It just fits the narrative perfectly.
Do you think it's people are like, there's just like uncertainty leading into it, and a little bit of fallout the week after, and then life goes on in a way, people go back to normal and there's less uncertainty. There's probably less, I think we'll talk about this later, but leading up to the election, there's always chaos, it feels like, and it's whether it's produced or unproduced chaos. I think it's a lot of that leads to uncertainty, which leads to the VIX spiking, maybe, and
well, and to that point too, Will, it's a great point. Also, emotions are elevated in election years on every side, and we all know emotions lead. So you got uncertainty.
Been very calm lately. I don't know what you're talking about.
Yeah, yes, it's very calm around here. No, but I think just on both sides, right? Especially, let's be honest, if this has gotten worse over the last few election cycles of emotions and of this like super catastrophizing of. Rabih and I joked in our last episode we did around the only thing that I know is that whoever wins, the world is apparently over, because that's what the other side wants you to believe. So Will, I think you're spot on with this. I think there's probably that emotion plus uncertainty plus all the PR battling going from back and forth that leads to this craziness, and then about a month later, once it's over,
up and goes
everyone's
on
kind
their
of just
life.
like, oh, weird, life is just normal again.
Yeah.
So I think you're totally right. I think we just follow that cycle. The market just shows that in the data.
Right.
So that's great. Rabih, what else you got on this?
That's about it. The holy grail of it is we are humans and we overshoot on the upside and downside. We're gonna see that overshooting reflected in the market, especially on the short-term period when it's a 1 week or a 1 month time period. But once you look at it on 1 year, which is still a very small point in a long-term investor's time horizon, it seems like it dissipates away. So
I love this. The point here being expectations, expect some volatility, but also expect it to dissipate pretty quickly. Yeah. And if you call us and ask us, should we be doing anything different based on the market? we're going to give you a spoiler right now. We're all going to tell you, no, do nothing different based on the market. There's factors to consider changing if they're for your personal life, but nothing to do with the market. Or sorry, nothing to do with the election. So that's great, Rabih. Thanks for that. Will, let's jump to you. Are you ready for shipping delays?
Maybe the question could have been, I guess I was reading this morning that like bananas are going to be
What?
delayed. Yeah, but are you a banana guy?
I have my yogurt with granola and banana every morning before I go to the gym. Golly, that's going to be a problem.
You better go stock up. Do some
Yeah.
COVID 2020 banana buying. So
there used to be toilet paper. Now it's bananas.
yeah, it's bananas.
Yeah.
Anyway, so I mean, I think most people have probably heard of that this is happening, but I think the number got it right here was 45,000 members of the International Longshoremen's Association went on strike Tuesday. These are the employees that run the ports, right?
Yep.
And they temporarily shut down 36 ports from Maine to Texas. So these dock workers are trying to get an increase in pay and benefits. And as a result of that not going their way, they went on strike, and it, basically shut these ports down. I guess it said 14 of the largest ports affected by the strike handled 25% of U.S. goods imports and 27% of exports.
It's got to have an impact.
Yeah, it says most of which come through the most impacted U.S. imports are building materials. Again, COVID, building materials, that was always stressful. European wines and fruits from Latin America, which AKA bananas, I guess, is like what people are saying.
I mean, do I occasionally enjoy a glass of European wine with my banana? Like this ruined my weekend.
The U.S. has been the world's top importer of bananas since at least 1961. So there you go.
Oh my gosh, the
port of Wilmington in Delaware now shut down as the #1 banana port in North America. So it's specifically bananas. I don't know. I all I know is ports are shut down, and it's crazy because it's saying that it costs like $4.5 billion a day every day it's shut down. Oh my gosh! And then it's like for every day it's shut down, it takes like 3 to 4 days to like unpack the stuff that was delayed. Wow! So there's a risk here that if it goes on too long, and could have a ripple effect across the economy. And Will, does it talk about? Does it break down in the article like specifically what they're asking for? Is it simply just more money? Is it like better working conditions, different hours? Have they? I'm guessing they've listed some level of demands. It says they're looking to secure a labor deal with port companies that protects their jobs from automation and raises pay 77% over 6 years. Okay. So I think that's what they're looking for, a pay raise and some sort of job security that they're not going to have robots take over their jobs in the future. Interesting. Which this is my first thought is like, you're demanding that robots don't take over your job. So then you stop working, via a strike. So then I would imagine would accelerate the process of saying, well, great, we're going to go find robots to do your job. I know, like I joke, but this actually has happened at some fast food restaurants. I know, like over the last few years, there's been similar disputes, not unionized type disputes. I'm guessing this is very union based, but I know this has happened at some restaurants where, thinking of like McDonald's and some of these groups in various states, that workers kind of did something similar. And then their response from the bosses were basically just like, make the robots do it. Great, we're going to go invest in robots. So it'll be interesting to see how that falls out. Rabih, what are your thoughts on this? A lot. Before I tell you my take on robots, what Will mentioned was bananas, unfortunately. And what was banana guy? Of course, I need the potassium. Yeah, or else I'll get cramps. But anyhow, pickle juice. And the other one was building material, right, Will? This is giving me 2022 flashbacks when I thought we were going to stop talking about the CPI and the PCE, but here we are again. The CPI is measured at a headline level and at a core level. And the core level of the CPI is usually CPI X energy, X oil, and X food. So, and why do they do that? Because they believe, economists in the US, that inflation, when it hits energy prices and when it hits food, it dissipates really quickly. It does not is not contagious to other sectors in the economy. So if we see an episode of inflation, we do not expect it to be chronic. It is actually and truly transitory.
Whereas shelter, which is the biggest part of the core CPI and PCE, it's around a third. This is actually the most stubborn piece in the economy that once inflation hits it lingers for longer. So the fact that we've got bananas on one hand, which is, although unfortunate, very unfortunate for Matt and I, is not going to be a big deal to the economy. Building material would actually keep housing prices, the inflation on housing prices, higher than we would expect it to be. So it's going to be interesting to see how long this takes before a resolution comes up, because the longer it happens, the shorter the supply, and the shorter the supply, the higher the pressure on prices. And maybe the Federal Reserve would not be inclined to cut 25 basis points every single month from now on. We'll see how long it takes.
That's an interesting point, Rabih, because we've talked about this a lot, that there's already a shortage of homes in the U.S., meaning single-family homes. Apartments are a different story, but single-family homes, rates are coming down. And so it is interesting if this goes on long, like you said, longer than I'd imagine. This is going to be at least a few weeks. I can't imagine they're going to solve this.
Well, I guess I think it said, somebody said something like, we believe the economic impact of a disruption would be too big to ignore for much more than a week, given the economy and inflation are key issues in the heavily contested election. And I guess Biden, it's saying he has no plans to invoke something called the Taft-Hartley Act, which I think forces a resolution. But I imagine if this goes on longer than a couple of weeks, he would have to.
Yeah.
Because I mean, it's a bad look headed into the election if inflation starts spiking again. And
yeah, that's such a good point, Will. And this will kind of come into the next topic we hit too. Yeah. But just the timing of this is so critical for both sides. We are in the peak of the final PR battles of both sides and what they're going to how they're going to spin these stories. But this could be catastrophic depending on what it does to inflation to that point, Rabih. It's a really good point. So I guess we'll see. We'll tease this. Maybe we'll hit this again over the next couple of weeks to see if there's a resolution. But Will, so you're saying the chances of this going on longer than a week it sounds like you're insinuating. I think
the analysts and the market is not expecting it to go longer than a week. We'll see. It's still going. It's been going for, I think, 3 days at this point. So, I don't know for sure.
It's already cost $15 billion.
Right. And I think it's already set it, again, it's 5 days recovery from a 1 day shutdown. So it's pushed things out 15 days. We'll see. I don't know. I think there was something in the article I was reading that said that suppliers have been burned by the supply chain issues over the past 4 years. And as a result, they're holding more inventory. People hope there's more inventory as a result of the supply chain issues. So we'll see how much it actually affects stuff. But again, the longer it goes, the worse it gets. I can't imagine there's not going to be a resolution.
You're saying basically as a response to what happened with COVID, suppliers are now basically have reacted to that. So hopefully there's more of a buffer there.
We hope.
Yeah, got it. Rabih, did you say you had thoughts on robots? Because that piqued my interest a little.
Yeah, and it's not really human versus robot versus machinery. It's more of let's put on like an economist lens over here and consider everything as a means of production. Let's take the human part out of it. And if you do that analysis and you sort all these means of production in terms of their productivity, you notice that as a means of production, humans are productive in a different way than machines are productive. Machines are incredibly productive at one task, where humans are very productive in tasks that requires them to be very adaptable to their situation. So in economics, the end goal is always to try to find the most efficient allocation of resources. That is the motive behind how you allocate resources. And if you want to do that efficiently, you would not want to put a very adaptable, incredibly intelligent means of production in a mundane, monotonic job. And you wouldn't want to put a very systematic, does not think out of the box means of production in a role that requires adaptability and managing risk. I think you know where I'm getting there. So I do understand that on a human level, fast food workers or people working at ports, and these jobs of actually the 20th century. This is the only skill they know. This is how they protect their livelihood. There has to be a sort of push and pull compromise. So until their personal career ends, they are not in threat. But new entrants to those industries should actually be discouraged from becoming it. We do not want increase in people who want to work at fast food joints, and we don't want an increase in people who want to work in warehouses. We want people to flock to more I'd say reasoning intensive jobs, ones that require
knowledge work,
knowledge based work, because that is what is going to make everyone better. This is what is going to make the economy more efficient. So in the long run, this is just long run, I'm talking like the next couple decades, those jobs are going to disappear. It's just like people who used to attend to elevators and people who used to attend to horse carriages. That's the idea. But we live in a society, you can't isolate people out. It's going to be a very slow transition because there are certain individuals with rights that we need to make sure their right to a decent and proper employment is there. So it's a push and pull between an economic wave of progress, a technological progress that no one can deny, and at the same time, values that we uphold regarding a certain person's right to find a job. And between, there's going to be a dance. We know what the end outcome is going to be, but we need to do it in a way that does not hurt our society.
Yeah, I love that, Rabih. And let's just highlight that this push and pull and dance of technological progress and what it means to the economy and individual workers, this is not a new topic. This is just the flavor of the week, basically, which is AI and the technology we're seeing. But this is not a new, it feels new and it feels crazy because of what AI's capabilities are. But this is no different than what the technology, the conversations being had in the earliest 19th century and going into the 20th century, whether it be, just think of when flight was created and what that did to the steam engine. There's going to be things that this has been going on for centuries, and this will continue to go on. It's no different. This push and pull is always going to be there. This conversation is always going to be there. So, Will or Rabih, any other thoughts on that?
I went to Sweet Green. There's a brand new Sweet Green at Fashion Island in Newport Beach, and then
it's like the salad place.
Yeah, a robot made my salad. This big fancy robot machine.
What?
And
was it good?
So I ordered on an iPad. It goes through this conveyor belt salad. It was great. They just put all the toppings that I wanted on it. It's it looks like they have these tubes of the toppings, and it just goes on the salad. And then the iPad still asked me if I wanted to leave a tip. So I don't know if I was tipping the robot.
That's a whole other topic, is tip culture in this wave of new technology.
Am I tipping an iPad and a robot?
Yeah.
Oh,
Greece
man.
is expensive these days.
Yes. Oh my gosh, that's crazy.
That was ironic. Yeah.
That's the epitome of what's wrong with tip culture. Am I tipping a robot? I don't think they need it. Oh, that's funny. Okay, we'll move on to the last topic here, which is student loan forgiveness actually going to happen? This has been on and off a topic we've covered ad nauseum sometimes, but I think it's really important to understand. So if you guys remember, I don't remember exactly when it was. Within the last couple of years, Biden proposed a $10,000 relief. So I'll kind of give you the categories that he wanted to have for student loan forgiveness. 4 broad categories. So those who owe more money than they originally took out, people who have been in repayment already for decades, students from schools with a low financial value. I don't know how they determine that. And then those who qualify for loan forgiveness under an existing program but haven't applied for it yet. So those are kind of the 4 broad categories. This was meant to, they said it could be up to, it was 3, I think the plan could benefit as many as 3 in every 4 federal student loan holders. So quite a few people. Yeah, this $10,000 forgiveness for student loans. So if you remember, there was, I didn't know this exactly until I read the article. I knew there was lawsuits being filed. I didn't know the details. There were 7 states who sued when this happened. And as we all know, lawsuits, whether they're won or they are lost, one thing that they do accomplish is they basically put everything on hold. And so that's what happened, is they filed the temporary restraining order and basically put it all on hold. And that's when they pivoted and they came out with the save plan and all of that. So what's happened recently is a federal judge let the temporary restraining order expire. And so now, as far as I'm reading this is now allowing it to go through. Is from what I can tell. Now, this is they literally said at the bottom of this article, this is a live update. I think this came out literally today. And so they're like, check back for details. So I'm sure there'll be more lawsuits filed. Who knows? But as of now, the temporary restraining order has expired, and now debt relief can be given, they're saying, to these literally tens of millions of Americans. So there's an update. I'll leave it there. Will or Rabih, any thoughts on this?
I was wondering, sorry, just to clarify, this is different than the safe plan, right? This is only the 10K. Oh,
correct.
Okay.
Correct. This was the original, as far as I understand this was the original plan Biden released, which was the original debt relief plan, which was $10,000 to these specific people, like that you had to be under one of these four groups of borrowers, and it was a $10,000, just straight up $10,000 off. And so that was the original plan.
Was there an income phase out?
Yeah,
with this?
And it didn't list. It didn't. I need to go back and probably get like the original details of what he had put out there. The article didn't go into those details, but yes, there was an income limit.
I'm pretty sure most of our clients didn't qualify for it.
I would imagine most of our clients would. I want to say, Will, to that point, I want to say it was something like $120,000, less than 120 grand in income as an individual, and like 240 as a couple, maybe.
240 as a couple, yeah.
So it could impact some associates out there and this was all undergrad debt, as far as I understand it. So, no, I think there's another. We talked about it earlier, right, with the ports and all that, and what this could do to inflation. There's an argument to be made that, combined with what you talked about with the ports, and then if this goes through, let's say it happened tomorrow, and all of a sudden $10,000 came off the books.
Everyone gets 10 grand. Yeah,
everyone gets 10 grand.
3 out of 4 student loan borrowers. Yeah. Exactly.
And I'm trying to think. I don't know the data off the top of my head, but think of how many people out there that have, let's say, $10,000 or less left in student loans.
Yeah.
I'd imagine it's a pretty sizable amount.
Sure.
And so what could that do to inflation? We know that 70% of the GDP is consumer, is the consumer. So it'd be, or spending. It'll be interesting to see if this goes through, what that does over the next few weeks or months.
Interesting timing again with the. I mean, it'd be a huge, if this goes through and it happens, I don't know how soon it would happen, but if it's happening, it's a pretty big win for the Biden-Harris administration to get this done. And so, it's a good optic for them.
Oh yeah. Well, and so we were saying, it's a great point, Will. We were saying this earlier I don't want to be a total cynic, but just any story I see over the next, from the last month leading into October and to the election, I'm always like, okay, what happened here behind the scenes?
Angle here? Yeah.
And I have no dog in the political fight. I literally just look at it and be like, okay, who got paid off to do this and like leak this story or do whatever?
Right.
I'm always thinking that. But Rabih, what are your thoughts?
Just like yours, it's election. Like usually the motive with policy is to actually, for a government policy, it's usually to raise government revenue and cut government spending to stimulate the economy where needed, or to control the income and wealth gaps in a country. Like those where the policies stem from. But in an election year, the policy is usually to help a campaign, and usually in unionized work environments, it's usually to push for better work environment and it's always political. They find a time where they can corner the candidate or the politician, and they would push for it. Also, just to bring it to a bigger context, in the context of the wars that are happening around the world, the reason a certain military operation would happen or not does it affect oil prices, and what would that do to a certain campaign over another? So stuff are not being motivated by their usual motives, whether it was maximizing profit or bettering an economy. They're all being motivated by election. Honestly, I'm sick of it. I'm ready for it to go.
I think we're all ready
over.
for it to be done. Well, and last point on that, Rabih, which is interesting. You take the same story. So let's take this loan forgiveness story, right? Or the fact. The fact is this is happening, right? Let's just say it is happening, right? And it's going through tomorrow. Elections just become a battle of stories, right? So the Democrats are going to say, look what we did, right, to give relief to all these millions of people. The Republicans are going to say, look what you did to inflation, or look what this is going to do to inflation, the deficit, or whatever it may be. So I'm with you, Rabih. I get tired of it all. I think by November 6th, I'm going to be excited for it to be over. But it is interesting to see these, again, battles of narratives and battles of stories over the same topic and how you can spin that. So, Will, any final thoughts on this at all, or anything else?
No, go team.
Go fight team. Go fight. Go team. Win. So, okay, this was awesome. Rabih, Will, thanks so much for being here. As always, thank you so much for listening. If you want to talk to us, if you want to talk about robots or bananas or anything, or just tell us your story and see how we can help you, go to dentistadvisors.com, click on the yellow book free consultation button. Also, if you want to save a dentist's life, share the show, share the Dentist Money Show. Again, thank you so much for listening. That was our 2 cents. Till next time. Bye-bye.